How is Islamic finance impacting small and medium-sized enterprises and microfinance initiatives? In this episode, we explore how Islamic finance empowers them, driving innovation and positive change. Welcome to CF Talk podcast, a place to learn and explore through conversations in Islamic and ethical finance with experts from all over the world. Stay tuned as we dive in the fascinating world of finance together. Good morning and welcome to a new edition of CF Talks, the space that we are discussing different aspects of Islamic finance with experts around the globe. And today we have with us a good friend of CF and a long-time collaborator with the center, Dr. Tanvir Uddin. He's a PhD by the University of Sydney on the Sharia law and microfinance. And he's also a serial entrepreneur and currently founder and CEO of the Wholesome Responsible Investment Fund. I believe that's something quite new, right, Tanvir? So
yes, we publicly launched this week. Thank you so much.
And welcome this morning.
Thank you. Thanks so much for having me. Really great to speak to you guys.
We're very happy. So, Tanvir, we would like to know more about the relationship between Islamic finance and SMEs and microfinance, and how I mean, like that's one of the biggest challenges on the financial sector, to reduce the gap and to reach to give financing to all kind of companies and entrepreneurs. And I mean, you're an entrepreneur yourself, so you probably experienced problems financing in the past. So how would you see that that Islamic finance helps in a different way to close this gap on financing in a different way that conventional finance do?
Yes, absolutely. So the lack of financial services or the undersupply of affordable and appropriate financial services is a major challenge globally. The World Bank generally conducts an annual survey, or at least every second year, through its Findex database. And one of the more recent ones in 2021 found that globally financial exclusion affects about 1.4 billion people. And why is financial exclusion a problem? It's not so much a problem for people in developed countries where you can get access to bank accounts, credit facilities, insurance products. But for a person who is living in a very remote location or has very little financial literacy, it can really affect them, because we ultimately depend on financial services to manage our cash flow, to protect against emergencies, and to obviously invest and take financing for productive activities. And so that's a global problem. Now, within Muslim countries, the research shows, and expert opinion is that due to different religious requirements of Muslims with regards to financial services, there does tend the religious requirement tends to be a contributing factor towards greater financial exclusion in Muslim countries. Now, of course, there are many other factors as well. It's not a simple causation issue, but it's something to take note of. We know that there is evidence of higher financial exclusion in Muslim countries. For example, a study by the World Bank found that between 24 and 30%, there's a 24 to 30% lower levels of bank account ownership, as well as active borrowing from banks in Muslim countries compared to the global average. And when participants have been asked about why is that the case, the reports of religious reasons the self-reported reasons of religious reasons has been higher in Muslim countries like Pakistan and Turkey. So that is another factor to play there. Now, where does Islamic finance come into this? Ultimately, Islamic finance is about combining practical solutions with mechanisms that uphold the religious law, like at its basic. But the religious law is beyond just saying, okay, it is going to comply with things that are prohibited and try and exclude that, as well as allowing things that are permissible. there's an
Mm-hmm.
element of justice, and the literature and the scholarly engagement with Islamic laws regarding financial transactions often come around the concept of justice and fairness. So, if we look at the most basic prohibition in Islamic finance, what separates between Islamic finance and conventional is the prohibition against riba. Riba, or an unlawful gain between two parties. And that is often due to interest-bearing or one-sided interest-bearing contracts, but it can be any other type of unlawful gain,
Mm-hmm.
such as through Ponzi schemes, through misrepresenting, through force and coercion. So it's a very broad term. But if we look at why that's the case, it's because of unfairness. Because from an Islamic perspective, parties entering a contract should have a fair go at being able to benefit from the contract. There should not be such a one-sided relationship that if the debtor, who is um, uh, receiving or taking on a debt to pay for something, they're not in a vulnerable position vis-a-vis the creditor who is providing the credit. So that's the kind of, I guess, the philosophical background towards it. Now, of course, the proliferation of Islamic finance has, I mean, it's been growing rapidly in the last couple of decades, but it still tends to be at a much smaller scale compared to financial the conventional financial system, even within Muslim countries. So, if we look at Indonesia, the world's largest Muslim country, the Islamic banking penetration rate is still in the low double digits. In countries like Bangladesh and Malaysia, it's a bit higher, at a quarter to almost maybe 40%, but it's nowhere near the majority. And so, if you're a poor Muslim in a Muslim country, or even in a non-Muslim country, um, the financial exclusion challenge is a lot greater. So one of the goals of Islamic finance is to try and address the injustice of poverty, but also to do it in a way that it is sustainable and ethical. And ethics comes into the play because we know that financial services can become unethical if they take advantage of people. And, microfinance is the area that I've looked at, and my PhD focus on ethics of microfinance is an area that has received a lot of controversial commentary, particularly
Mm-hmm.
as with things like farmer suicides in India, very
Yeah.
high interest rates. So hence why Islamic finance has a role to play, not only to address the ethical issues, but also to increase financial inclusion.
Very interesting. And talking a bit more, as you say, like it's in the nature of Islamic finance to reduce inequality and to pursue good. So, how would you say these ethical and cultural considerations are shaping these investments and channeling the investments in a way?
Yeah, absolutely. So there's a number of dimensions to how Islamic finance deals with these things. One is, of course, there is no doubt that there is a personal identity element to Islamic
Mm-hmm.
finance. So when I looked at and I interviewed borrowers in Bangladesh and Indonesia, when borrowers associated with an Islamic microfinance institution, it helped create a strong identity with their own religious and cultural values. And that's an important thing. And that's not even a point just about Islamic finance. I think that's quite an important point about any type of financial service in any country, that finance is a deeply personal relationship. And so cultural identity is an important part of financial services. And this is why, for example, even in developed countries like in Australia, where I live, whilst there are a few very large financial institutions, community banks and community credit organizations are still common because people find that community association is important. So, as a first point, Islamic financial institutions help shape that religious identity, and they do it through things like, obviously, they celebrate religious festivals, they try and greet people using the religious, assalamu alaikum, and things that are culturally appropriate. So that's one. The second thing is, again, connecting back to the philosophy of justice and fairness. When a client is having financial difficulty and are unable to pay, or they need some support, this is where Islamic financial institutions tend to really focus on the social justice and compassion. If I look at the microfinance space, a lot of the institutions that I interviewed for my research, and particularly I looked at 4 of them, they tended to exercise a lot of generosity, providing additional time for the client to repay, understanding the client's problem and helping them resolve that. And that's a really important part of making sure that the financial system is not exploitative or not or completely inconsiderate of the reality of where clients are. And we see that that's another thing. And the third element is Islamic financial services do not operate in a vacuum. So, for example, when you go to a bank, you don't go to your local bank in Australia or in Spain and expect them that they're also going to give you gifts during Christmas or Ramadan, or they're going to
That would be nice.
provide. It would be nice, or that they would help channel charitable donations to their beneficiaries, or do anything like that. It's a very formal transactional relationship. Although, I mean, there has been a movement to try and address that. Like there are many new fintechs and new forms of financial services, but overwhelmingly, it's a very one-to-one transactional relationship. When I go to the bank, I don't know who else, if my neighbor is also a client of the bank, and I don't have any relationship with other clients in the bank. I just deal with the bank one-to-one. When I looked at when I did my field research in Islamic microfinance, what we found was that some of the institutions were structured like cooperatives, where the members all gathered together as members of a group. They tended to borrow together, lend together, support each other. They tended to and the institution tended to provide donations and benefits, especially if they had children. They might give them extra gifts. They might distribute plants. There was a case of a microfinance in Bangladesh that distributed fruit trees to the clients to help encourage them to grow trees and have a bit of a mini garden. So that sort of relationship and that compassion is really key. And these are some examples of how institutions approach that. And that's because the financial transaction, the religious, I guess, philosophy and the community membership are all interlinked. And that's quite a key thing that's relevant.
Looks beautiful. I think that's like when you're talking about it, it's I remember many of the marketing campaigns of conventional banks here. They will claim to be very trying to be a friend or a collaborator with the investors and the people saving, putting their money in. But it's true that, I mean, it looks like an ideal version of what a bank could be, what you're describing. However, I mean, like one question that I would have is like these banks are for-profit institutions. So how do you deal with profitability and risk on this environment of also helping in case of financial difficulties and so on?
Yeah, no, absolutely. That's a really good question. And this goes to the design of financial institutions and the design of financial products. We need to have a diverse range of institutions with a diverse range of products to meet different people's needs. A poor farmer is not going to receive the same type of product and treatment as a commercial large-scale business that's operating in the capital, has a very big workforce and is very educated or very well, connected to legal and accounting help. Like if we look at 2 very different ends of the spectrum, and so the products and services need to be tailored accordingly to that. In Islamic finance, there is actually quite a diverse range of financial instruments that are available to support people depending on their needs. On one end of the spectrum, you have simply zakat. Zakat is a alms tax that is collected from people who meet a certain financial threshold, and it is distributed to the poor and needy and a few other categories as per the Quran. And so certain people, they don't need a credit product. They just need help. Like they're trying to pay for medical bills or they're trying to feed their children. They don't need a complex financial product. They just need a grant and need someone to do that. And so concepts like universal basic income and providing a safety net, that's all part and parcel of a society. And some of it the government provide, but also NGOs and charities fulfill that service through zakat and sadaqah. Sadaqah is obviously voluntary contributions. So you have that. Then if you move along the spectrum, you have instruments like awqaf. Al-Kaf is a charitable endowment that is set up by someone who wants to donate capital, and that capital is invested, and the profits from that investment are used for a charitable purpose. So that's another vehicle that's available to support people. And then you have Qard Hasan. Qard Hasan, which roughly translates to a goodly loan, is the only debt instrument that is explicitly mentioned in the Quran. And that is a very powerful tool that, hey, look, someone needs money to get through a period. I mean, we all do that when I was growing up as a high school student, a uni student, I'd go to a friend and say, hey, I'm short $50. Can you give me $50? I'll pay you back. They didn't charge me interest for that. I paid them back when I could. So that idea of let's help people because they need some money. It's not a donation or a grant. They're going to pay me back after some time. And then in the Quran, it talks again that if that person is unable to pay, then it's better for you to just forgive them. And that builds compassion, that builds care in society, because it's not a commercial trend. I'm not trying to profit from your misery. I'm giving a bit of money, and then that person can take it. Then if we move along to commercial transactions like murabaha, which is credit plus contracts, ijara, like financial leasing, or we look at forward sale contracts like salam, which is like pre-financing for harvest, or istisna, which is pre-financing for manufacturing. All of those contractual mechanisms can be used in a commercial context by a for-profit institution. They can design the product to be profitable. They take into consideration their cost of funds, their credit, all of that, and they price it appropriately. Now, the difference, though, between an Islamic financial institution and a conventional institution is that if a person is facing difficulty to repay, you cannot charge compounding interest on that delay. Rather, you can do things like penalties, and that penalty is then donated to charity, or what institutions can do is utilize other security mechanisms. Can they take a security on a real asset? Can they take a guarantee from another person in their network? So those are mechanisms that they can use to support that. And generally, if they're pricing the product in a competitive market, then they will be commercially viable. And they have mechanisms to do that. Malaysia is one jurisdiction that has developed a variety of credit enforcement mechanisms. So one of our, and I'll just finish on this, one of our investment partners in the fund that I manage is, they take a number of security positions, including a director's guarantee. If that business actually has the ability to pay, but it's refusing to repay on their financing contract, then that institution has the right to take the client to court. And some of our partner has actually won a number of cases in the Sharia court because the client was hiding assets that they could use to repay. So we need to differentiate between those who can pay and those who can't pay, those who are willing to pay versus those who are not willing, but they actually have the means to pay. And of course, the final thing to consider is it goes back to design of financial products. If you're going to provide easy credit to people who are not sophisticated, then obviously you're going to create a situation where there's going to be a lot of burden for debt repayment. So we need to go back to the drawing board and say, is it necessary for people to have that credit in the first place? So if we can solve the need from the beginning, we can avoid the problem when they can't pay.
Yeah. I mean, you have to, like, the financial institution must be more responsible on
Absolutely.
where are they addressing but it's really positive to see that we can create like a more compassionate financial system and still be profitable and still be in business, let's say, that is not necessarily only a charity thing, like you're saying, it's a different part of the spectrum.
Yes,
Okay.
absolutely.
And that's something, I mean, I'm very interested to see if that universe is moving from the Muslim finance, from the Islamic finance to the non-Muslim community as well. Like, would you say that,
Excuse me.
like, how do you think non-Muslims can benefit from these financial institutions and from these instruments? And
Yeah, absolutely. There's a couple of things that that I think are universally beneficial, not just for Muslims or just for Islamic finance. One of them is really comes down to designing various different types of financial institutions and institutional products. So, you know, one of the most powerful tools to help people who are very vulnerable is a non-interest loan or a Qard Hasan type loan. We should be supporting the very vulnerable with those type of products. Instead, what we see is, double digit or sometimes triple digit interest rates on loans to the most vulnerable. There was a microfinance institution in Mexico that was charging almost 200% annualized interest. And in Australia, if you have irregular income, you're a single mother with kids, when you go to the bank to borrow money, they're going to charge you a lot more than someone who has a good job and has assets. So that feels a little bit unfair because the banks will justify saying, oh, they're a higher credit risk. Well, if they're a higher credit risk, is credit the right solution? Is something else that they need instead? So the design of products is one thing that's important. And I think related to that is designing more blended products. Is there ways that maybe, for example, the government can take first loss on a credit product to someone who's vulnerable? Can a philanthropic organization underwrite a percentage of the loss on a loan? The blended finance movement, I think, is really relevant, and we need to see more of that as a way to support people most vulnerable. The second element I think that's really necessary is to try and reduce, I think, take a step back and take a very big picture approach to financial system, which is around the philosophy of community, cooperation, compassion, and to reduce the financialization that we see. One of the big reasons for the global financial crisis 2008 was the over financialization and over financial engineering of very complex products that were distributed to retail and even institutional investors in a way that was not sustainable. And so we need to take a step back and say, are these products necessary? Do we really need these complex, mortgage-backed securities, CFDs, all sorts of things that were then credit swaps that created so much leverage and so much complexity that even the regulators didn't even understand it. So, and I think Islamic finance provides that like an input to that conversation because of two things. One is philosophically, we need to go back and ask what's the purpose and link it back to society and positive benefit. The second thing is that over leverage instruments should really be avoided. The complex derivative structures, we really need to think about whether the benefit outweighs the costs, and take that approach. And obviously, from Islamic perspective, a lot of the instruments are actually not allowed just because there's so much complexity to it. And then the third thing is, how do we create a more community environment around our financial system? So it's not just a one-on-one transaction. And I think that one of the things that I saw, especially in the microfinance context in Indonesia and Bangladesh, is that these institutions were bringing people together. And I think financial institutions that bring people together with shared values and a sense of community, that is something that's beautiful. That's not just a religious thing. That's not about just only one community. That's something that we can all benefit from. And I think that the community banking initiatives, the mutual insurance and mutual banking societies, there's a movement like that. There's a few of them in Europe, for example. I think those sort of movements are really relevant to complement the more corporatized financial system players out there.
Very interesting. It looks like a hopeful future, to think that we will move to this sense of community on the financial sector. Do you see like that materializing? I don't want to take much longer of your time today, but as to close it, like, how do you see this materializing, and how do you see like both maybe SMEs and small entrepreneurs approaching to this to Islamic finance? Maybe is that something that is happening, or from the other side, from the banks and other financial institutions, do you see a more ethical approach that it's taking place already or not?
Yeah, sure. I'm just going to quickly share something that I think is helpful to conceptualize. We need to start by thinking about capital and thinking about it in a different way. So if we think about, there are many forms of capital out there, right? So you have financial capital, which is generally invest capital or financial transaction for a purely commercial purpose. Then we have responsible finance and responsible investing, which is, okay, we're going to apply some ethical filters. We're going to take certain things out that we think are harmful, like maybe it's investing in weapons or investing in environmentally harmful activities. Then we have obviously the sustainable finance, the ESG investing movement, which is let's try and invest in a way that aligns with the United Nations Sustainable Development Goals. And then, of course, we get to impact investing, which is about let's invest, let's design the transaction or the institution or the instrument from the get-go in a way that it will lead to a positive benefit outside. And then finally, there's philanthropic capital. What I would like to advocate for, and I think that there is a growing movement for, is more impact investment. Impact investment is not just at the venture level where a new business is incubated. It's also in how we allocate capital to growth businesses and working capital. So if more investors were to start businesses with a mindset that this company from day one has been set up for a purely positive societal impact, and then other institutions continue to fund businesses that are growing on the basis of they're doing more positive things, such as environmental conservation or reducing poverty, supporting more sustainable agriculture. If more capital moves into that type of business, then we can be hopeful that we start incubating a new series of companies in the world that are doing positive things. And by doing so, what are we doing? We are removing capital from harmful activities. That's how we're going to get that conviction. So we need to encourage asset managers, institutions, governments to try and incentivize more impactful organizations and create ways to support them more. And eventually, like, imagine this, like a very simple thing I say, if tomorrow every single bank was to say we are no longer going to finance fossil fuel emissions that are going to contribute towards more than, say, 3 degrees Celsius or even 2.5 degrees Celsius above pre-industrialization levels of carbon. If that was to happen tomorrow, every single fossil fuel operation that is at that level will cease because they'll be starved of all money. Right. So that's if that is possible, then we can start creating the institutions of the future that we wish to see rather than support the ones that are causing harm.
Well, that's a very promising future. I think you're in the right track with the wholesome, responsible investment fund right now. You will.
We're trying to get to that domain, and I'll just quickly share screen for our if anyone wants to find out more about wholesome and follow along. But yeah, like we're trying to be an impact focused fund. We obviously adhere to Sharia compliance, but we try and go beyond just formal Sharia compliance. So can we invest into SMEs and microfinance that will create jobs and help achieve greater societal impact?
Interesting. I mean, you're not marketing the Muslim community here. You're marketing any global investors, right? So
yeah, absolutely. I mean, this is a very human cause. Personally, I think this is of relevance to everyone, regardless of their background or beliefs.
It's nice. I think maybe in a few months we have to meet again, and you can tell us in detail about how the fund is moving and where
absolutely
moving. Yeah.
Would love to.
Well, thank you so much. It's been very interesting to have this discussion with you today. And we will, as usual, we are recording the session and putting it in our media, so it will be available to everyone that wants to learn more about microfinance, SMEs, and Islamic finance. So
my pleasure. Thank you so much, Jose and Laura, for organizing, and for hosting.
Thank you very much, and enjoy your evening in Australia. And we are just starting the day here in Madrid today.
Wonderful. Have a great day, and thanks again.
Thank you. Bye-bye.
Bye.